Hey, everybody. All right. Will the banking system go down March 11th? That's about 2 weeks from the date I'm recording this. We've got that on tap here. We're going to get into that and what I think is going to happen, and some other news to get into regarding the financial economic situation that we're in right now, which is the biggest bubble of all time, the housing bubble, way beyond where we were 2008. The stock market, all-time highs, and I have to look here, but I think we're still at all-time highs in all four indices. Let's just go through them real quick here. Dow Jones way above the previous peak, which was 36,200 back in September 2021. We've got the S&P way above that previous peak there, which was about 4,772, also September 2021. The NASDAQ way above the peak as well. That peak was it September? Yeah, September as well. So as you see here, the Russell 2000 is the only one that hasn't went on to all-time highs here recently. But it's very interesting when you look at it. I mean, I remember when people talked about the stock market after the last selection in 2020, when the current president took over, they said he's not business friendly. They said he's going to cause the stock market to collapse. People found out that it's not about who's running the show behind the big desk. It's about the money creation, and as long as they can keep pumping money into the system, as long as the top 10% don't sell off their positions. Remember, the top 10% own about 90% of all stocks. It's amazing when you think about it. The market will not come down. It's propped up by this big money. If you and I and every bottom 90% person sold off our stocks, it would barely make a blip on the map. Why? Because it's the top 10% that own 90% of all stocks. So the bottom 90% selling off a bunch of stocks or even all their stocks still wouldn't bring down the market very much, maybe 10%. But this is very, very heavily consolidated. Until the big money gets together and decides to sell, you will not see a correction. And you might want to ask yourself, do you think the big money wants to see the markets come down this year in 2024? If you do, then you know exactly what to do with your investments and with your position. Well, let's get into the Bank Term Funding Program. Now, this was set up back in March 2023 when the banks started failing. We had a string of bank failures, but it's been very interesting. I'm seeing somewhat of a news blackout on this here. Let's just bring up some results. This is just a news search, the Bank Term Funding Program. And I haven't seen any articles out for a few weeks. This one here out of Reuters came out a month ago. Fed to allow emergency bank lending program to expire on March 11th. This one came out 3 weeks ago. This is one of the more recent ones here. Bank term funding program expiring March 11th. You would think this would be the biggest story. Now that it's only a couple weeks away, you would think this would be the biggest story in the financial economic media. Another 1 month ago, Wall Street Journal, the Fed launched a bank rescue program last year. Now banks are gaming it. Fed announced funding program will cease making new loans as scheduled in March. Then we start scrolling down, we see another one about 3 weeks ago. Not exactly regarding just the program, but you get my point. There's not much news out there that you would expect with this rescue program that basically is a lifeline for the banks. Now, some people say that this is essential, that the banks will fail without it. Other people say that the banks don't need this, that essentially banks can print their own money. And when you look at the reserve requirement, which is zero, banks can give out their own money digitally without actually having to have any of it in deposits, right? So it's pretty crazy. What do you believe? Do you believe that this program was just put out there to make it look like the banks need help and that the banks actually do not need the help? I mean, please let me know what you think down in comments. I'm seeing a lot of different takes on this and a lot of different opinions from across the political spectrum, not just people commenting on this channel, but just people that have been financially involved in the financial world for decades. A lot of people, you can just search yourself and get their opinions on it. I'm seeing opinions all the way from one side to the other on this whole funding program and what it means. People that have been looking at the markets for decades, quote unquote stock market experts, economic experts, some of them here right on this platform that you're watching me on, you watch them and the opinions are just so far from each other that it's just insane. And who knows what to believe right now. All right, but let's get into some other economic indicators here. Now, we always talk about the consumer is tapped out or close to being tapped out, living paycheck to paycheck, but yet consumers found a way to lose a record amount of money in 2023. We talked about this in 2022 and 2021, how each year was setting new records. Where are people coming up with the money with the levels of debt right now at all-time highs? Everyone should know that by now. Where are people coming up with the money to buy, or not, I shouldn't say buy, to give to the casinos? U.S. casinos won $66.5 billion in 2023. They're saying they won it. Well, the players at the casinos lost it, so you can say the casino won it. The best year ever, another best year. Where are people coming up with this money? Are people taking cash advances on credit cards? Are they spending it at the casino? America's commercial casinos won $66.5 billion from gamblers in 2023, the industry best year ever. So I guess they found a way to set the games up to where the house wins even more. When revenue figures from tribal-owned casinos are released separately later this year, they're expected to show that overall casino gambling brought in close to $110 billion to U.S. casino operations. So brought in 110, and so that means if they won 66.5 billion, then they gave out what 50 something billion. So yeah, still making a lot of money. And will we see this year in 2024? I mean, what's your prediction on that? Because everything that we see and hear and read, tells us that consumers are not doing so good. But it's a head scratcher sometimes because you see people out at these sporting events, you see people at the casinos. That's another big one. Traveling, hotels packed, vacations, people traveling, airlines packed. People keep on finding the money. To me, I think it's mostly taking on more debt. And I think this game is only allowed because the credit card issuers and the banks keep letting people go further into debt. Why? Because I think now that the banks don't have to have any money in order to loan it out, I think they're just continuing to issue higher credit limits. I mean, let me know your opinion down in the comments. That's the way I see it. Until we have some sort of regulation in the banks that requires banks to hold at least some cash, at least 1%, even 1% would be higher because we're at zero right now. So even that would be a game changer in my opinion. But as long as it's unlimited, then I think this debt is unlimited, and then we risk hyperinflation and prices going up and never coming back down. And with the U.S. dollar reserve status under pressure right now, this is something that could really play out over the next few years. And some people say this is going to come down again in 2 weeks when this funding program's over. So I would say, prepare, be ready for something to happen ASAP, but also prepare because if this thing gets dragged out for many years, you don't want to be hunkering down in the woods in a survival cabin somewhere and life still continues mostly normally, right? You know what I'm saying? So let's get into this last article though. Consumers pushing back against price increases and winning. So what are they talking about here? Consumers are going more towards generic labels, more towards store brands, and buying less name brand items. So if people have all this money to spend, why are they downgrading or downsizing and selecting lower priced items, more store brands, and less shopping at more expensive retailers and more shopping at Walmart grocery, other discount retailers, Aldi? Let's just get into this. So this, is another thing that points to consumers are changing their shopping habits because a lot of people are so far in debt and savings, close to a 40-year low. Inflation has changed the way many Americans shop. These changes in consumer habits are helping bring down inflation. Fed up with price hikes, about 90% on average, prices are up. Before the pandemic, consumers are fighting back in grocery stores. They're shifting away from name brands to store brand items, switching to discount stores, or simply buying fewer items, snacks, and gourmet foods. More Americans buying used cars versus new cars. So we see the change in habits. We see all the obvious clues and evidence that the consumer is under some big time pressure, but yet people still found the money to go to these casinos, giving the casinos money. Another thing, please let me know down in the comments, right? This is so difficult sometimes to navigate. All right, folks, we're going to wrap this one up. Please let me know what you think about all this, and we'll be back ASAP with more news. I got a big one to drop next report. So please make sure you hit that notification bell, that you like, subscribe, keep this video out there, get this video some traction. And to keep this channel alive, please make sure you come back, and we'll talk to you very soon, everybody. Keep stacking. Bye for now. Peace.